What's up guys, welcome to Oz Wealth and welcome to another video. Finally, we're seeing a correction in the stock market. Guys, we live for days like this. How long we've been going up further and further, and finally we're seeing the market starting to slide down, and what a beautiful thing to see. Look at those graphs here. Look how things were going up and then started to slow down toward the middle of the week, where Tuesday, Wednesday, Thursdays were the best days to shop to get the best stocks on discounts. And we ended the week with a little rebound, especially for the tech sector, as you see here. But let's go through the main indices. The Dow ended the week down 1.5%. The S&P ended yesterday, Friday, minus 0.48%. The Nasdaq, which is heavy on tech, ended yesterday with with a gain of 0.5%, and the Russell also ended the day with the gain of 0.5%. As you see here, the sectors, the information technology ended the day with a gain 0.5%. The consumer discretionary 0.5% also. Consumer communication services almost flat, and the rest were still recovering from the downside or from the slide that we had Thursday, Tuesday, Wednesday, Thursday. As you see here, Johnson & Johnson was on a really beautiful, sweet discount. Industrial Caterpillar went down 3%. Materials, consumer staples, real estate, from realty income to all these REIT stocks were also on starting to go down. Utilities also, as you see here, 1.8% negative. Financials from Bank of America to Chase, JP Morgan on a kind of sweet deals. And also energy started to slow down after the huge rally we had for Exxon and Chevron and Pembina. We started to see some kind of slowdown in the market, and we ended the week kind of a little skeptical, a little cautious, and hopefully next week we're gonna see more of those days so we can continue to shop further in the market and build those stocks that we were always wanted to get, especially like Apple, Microsoft, Amazon. And as you see here for my Robinhood portfolio, for the day on Friday, I was down 1.18%. For the week, I was down 4.14%. For the months, I'm down minus 6.79%. For 3 months, I'm up 5.7%. For the year, I'm up 23%. And for overall, I'm up 24%. Really quick on the week, as you see here, we started the week sliding down a little bit, and then Tuesday was the biggest hit where things started to go south, and by then I started to move some funds from the saving to the brokerage account like Robinhood and Charles Schwab. And then Wednesday we had a little of a recovery, and then Thursday we had another dip, which like scared the entire market. Most of my friends started to sell their stocks, where in fact I was just like them, panicking, and this is like a huge dip considering all the rallies that we had for the last few months. And then Friday we ended the day almost like flat with like slight recovery, especially for the tech sector. I'm talking the big giants like Apple and Microsoft and Tesla, which was really interesting, give some kind of safety factor. But looking at this graph, how this week passed, kind of gives some little indication about the volatility in the market and what we might expect for the next coming weeks. I personally think that next week is going to be more interesting and things are going to be further south. And for those who have cash aside, I think this is a great opportunity of not a lifetime, but seasonal time, if we can say, since like things don't always go down. And this is such a lucky time that we're living in, where we can get things on discounts. And I'm going to share with you further what are the stocks I went for. As for my holdings, as you see here, Apple is finally 100 share. This is, guys, this is something I was always wanted to have. I've never imagined like a day will come where I can open my Robinhood portfolio and see that I own 100 share of Apple in my account. It's just something like so beautiful to look at, and I finally made it happen. So if we go to my portfolio, if I go to my account and we go to history and share with you on the orders that I placed on the February 24th, I placed an order for buying 25 shares of Apple to cap out to 100 shares, and I bought this stock on $124. I know the stock went further down to almost $119, but it's so hard to time the market. And like when everybody was panicking, everybody was selling, I was buying more and more. And 25 shares of Apple, I get them at $3,100. This is something I was planning for. So I was having this funds ready for days like this, because all the momentum, all the atmosphere, it just feels like things are going to go south. And I took advantage of that opportunity, as I was starting to take advantage of it when it started. Like a few days later, as you see here on February 22nd, I bought 5 shares. I bought 5 shares of Apple at $126, and then before that I bought 10 shares at $130, and then also before that I bought 15 shares at $136. So as you see, I was starting to buy the dip as it goes. I am in the course, I am in the market. I mean, it's impossible to time the market and hold all the cash to wait for the $119 to happen. I mean, $119 to happen, and then buy everything and go all the way in. It's just not going to happen, and not even a genius will be able to speculate or expect that's when it's going to happen. So I think I did pretty good, as I was having the funds ready and I had the plan. I knew what to buy, and I feel good about it, and I think we did pretty good. We also added 1 share of ARK, as I'm going to go dollar cost average on ARK, and I currently own 5 shares. And as you see, this is part of my plan. I always want to have 100 shares of Apple. This is going to be my growth stocks base, as Tesla and Apple going now to be as Tesla and Apple right now going to be almost 50% of my portfolio, as I'm going to share with you later on the breakdown of the entire portfolio. And then I think from now on we're going to be focusing on more into dividends and high yield dividend blue chip big company stocks. That's going to increase our monthly payment from dividends. As for my main dashboard, as you see here, we're at $77,378. On Wednesday, when it was a quick rebound, we hit almost $80,000 as the overall portfolio. And after purchasing those 25 shares of Apple, our annual income from dividends is at $2,130. And as you see here, if you go to income and see what we're getting from Apple, I think Apple, I'm gonna be receiving $20 from Apple quarterly with a total amount of $82 annually. It's just something nice to have, and I think for now my mission with Apple is over, and I'm gonna, as I mentioned earlier, I'm gonna be starting to focus on more blue chip dividend stocks. And going back to my portfolio and how we ended on Friday, a quick run up for my holdings. As you see here, Apple 100 shares. Apple was up on Friday 0.2%, AGNC the same 0.3%, ARK almost 1%, American Express and the financial in general, as you see here with Bank of America still toward the downward. Caterpillar, after the big rally and crossing the $215, now we're starting to see a pullback. The recession-proof stocks like Con Edison, I think it's such a sweet deal right now, and it's below my cost base, $65. We might consider adding some Con Edison next week. The same thing for Hermal Food. I think we're good with Intel, and Intel was almost up 0.5% on Friday. Johnson & Johnson is one of those blue chip stocks that I'm having on my radar, and I'm starting to, and as soon as the stock goes further down, we might add a few shares. Coca-Cola is on the top of my waiting list to add more shares. I think Coca-Cola is on a sweet discount right now. And as you see the graph here, if we go to Robinhood back again and look at Coca-Cola and see where things are at the stock here, and you see how things are going, and see how things started to go really south for Coca-Cola. If you look at 1 month or 3 months and see that dip that happened on December, and I think the stock is right now on such a sweet deal. LTC is down 1.2%, Main Street Capital 2.7% up. REITs and the real estate stocks are down 2.2%, as you see here for Realty Income. Pembina and the energy in general, like Exxon, I will see later, were really down. Those guys really get affected by the volatile market. Philip Morris is down almost 3%. And the rest of the indices, as you see here, they were just going with the market, no big deal. I'm happy with what I see here. AT&T, I mean, we have 200 shares and going down 2.6%. I don't think it's something I'm gonna lose my mind. This is a long-term investing for AT&T. We might add more shares if the stock gets to $25. And for Tesla, it was also on a sweet deal, but our plan was to cap on Apple and ExxonMobil. As you see here, finally we're seeing some pushback after a huge rally from the $45 all the way to almost $55. And as we go, and for the diversification of my portfolio after the big purchase I made for Apple, if we go here, we see the information technology is finally taking the lead to the top of my portfolio. Apple and Intel right now are the biggest holdings in my portfolio with 25%. Tesla, with the slide that we see, and the stock is like pushing back and losing a little of its value, going second to my portfolio. But as you see here, the information technology and the consumer discretionary, the three stocks, Apple, Intel, and Tesla, are 50% of my portfolio. I was talking about it in a video earlier. That is not what's supposed to happen here. I'm a big fan of big diversifications, no more than 10 to 15% for each sector. But having an opportunity with a market that's very volatile, that pauses an opportunity to get things on discounts, well, I would love to hear your thoughts, guys. For 3 of you still watching this video, I would love to hear your thoughts about what do you expect for next week. Is the market going up or the market going down? I personally think things are going to go further down as March starts, and the fear of repeating what happened in March of last year is still looming over there. And I would love to hear your thought about it. Please share with me what you think. I would love to hear your opinion. That's it, guys, for this week. If you have not signed up to Robinhood yet, links are in the description below. You can get a free stock from Robinhood. It's a win-win deal. And if you have not smashed the like button, please do so. You can kick it, hit it, smack it, do something to it. It will mean a lot to me. And if you like the content of this channel in general, please consider subscribing and hit the notification bell. And until next time, you guys take care.